A subscriber recently asked me to do an analysis on NLB stock, which is a bank based in Slovenia. In this video, I'm going to look at their business model, services, moat. I'm going to look at their competitors. I'm going to look at their financials, their valuation. But I'm going to do all of this through Simply Wall Street. So Simply Wall Street has a lot of great features and it has excellent DCF modeling software. So I want to use that to analyze NLB stock today. Now they are offering an extended 14-day free trial and 30% off on all their plans. So you'll see why I like Simply Wall Street through this video, but if you want to get the link to them, it's down in the pinned comments below. And now if you like this content, please like and subscribe, and let's get straight into this video. Now, as you can see from TradingView, they have gone up since the April drama last year in 2025. They've gone up from around $21, $22 to around $36, $37 now. And this is all in euros because they're a European bank. So to trade this stock, you do need to use the international mode on Fidelity. So let's go into their investor relations and see what they actually do, what their services are, what their mode is. So NLB is part of NLB Group, and that is the largest banking and financial group in Slovenia, and the largest financial group with headquarters and an exclusive strategic interest in that home region of Southeast Europe. So they are relatively a regional bank of, I would say, Southeast Europe and specifically Slovenia. The group utilizes a universal banking model and supports its clients through retail, corporate, and investment banking services. And they intertwine the sustainability intensively into all of its operations. So since it's a group, in addition to the main stock that I'm analyzing, NLB, which operates in Slovenia and is a public company, NLB Group is comprised of 6 subsidiary banks and several companies for ancillary services, asset management, real estate management, leasing services, and a whole bunch of other stuff. And they operate in the markets of Bosnia, Montenegro, Kosovo, Macedonia, Serbia, Croatia. So all Eastern Central Europe countries. Now, looking at the NLB Group as a whole, so their total assets are 30.4 billion euros. They have total equity of 3.5 billion euros, net operating income at 328.2 euros, active clients as 2.9 million, employees about 8,179 in NLB Group, and there's 7 banks with 385 branches in those regions. So going to Simply Wall Street to look at this stock, you can see that I've imported my public long-term account here. Yesterday was a great day with 227.5K in the holdings. That's over 6 holdings, which I've talked about in previous videos. And then total returns close to 80% now, over 100,000. And one of the many cool things about Simply Wall Street is in the portfolio view in your dashboard, you can see the portfolio versus any index that you choose here. So there's a drop down here where you can compare your portfolio to the S&P 500, NASDAQ, FTSE, Australian index, German index, several others, Japanese index, and even benchmark to a market. So United States, Australia, United Kingdom, Canada, India, whatever you want, China. So that's really cool. I've selected the S&P 500 to compare against my portfolio, 27.2% over the last year versus the S&P 500's 15.3%. So I'm invested in the right things, I believe. Let's look at NLB stock. So here in the search bar, you can type in NLB. And the interesting feature about Simply Wall Street is you can look at all 4 listings. So I pulled up NLB and let's look at the London exchange, for example. So with ticker NLB trading on the London exchange. First thing you'll notice is the company overview. It's broken down into their main information, which all investors need to look at anyways, a description, the rewards, and the risk analysis based on all the different sections here, and then the snowflake. So the snowflake is something I want to talk about just because I think it's very useful to performing analysis on a company. Now, they've broken it down into value, future growth, past performance, health, financial health, and dividends. So at a glance, you can look at whether a company is worth investing before you spend hours and hours of research and due diligence looking at a company. So here for NLB, you can see that it's looking pretty good. Their health is maxed out here. It passes all 6 checks on Simply Wall Street, so it's a really good position. Their value is pretty good. They pass 4 out of 6 checks. Dividends is 3 out of 6 checks. Past is 2 out of 6 checks. And future is 2 out of 6 checks. So it's really good to weed out investments that you don't want to even spend time looking at. And that's why one of the main things I like about Simply Wall Street. So based on this, I do want to continue looking at NLB because their financial health is amazing. And they do look like they provide some value compared to the current stock price. So going on into the company overview, you'll see that there is narratives. So you can actually put in notes about your own analysis about this company. You can put in your own fair value that you calculate. Their competitors are also listed here in the company overview. So if you want to know what they are competing against, you can see that immediately, and their snowflakes. So TBC Bank Group with a market cap of 2.4 billion euro, Lion Finance Group 4.3 billion euro, 8.9 billion euro at HSBK, and Stan at 41.4 billion euro. So these are main competitors for NLB stock. And you can see that this one in particular looks very strong with their snowflake analysis. So that might be another company that I want to look at after I look at NLB. So under the past performance segment, you can see that past criteria checks only 2 out of the 6. And those 2 are NLB has high quality earnings, and NLB's earnings have grown by 15.8% per year over the past 5 years. It gives you a little bit of description underneath each of these segments. That gives you an overview of what you're looking at in that particular segment. So NLB Bank has been growing earnings at an average annual rate of 15.8%, while the bank industry saw earnings growth at 23.4% annually. So it's a little lower than that, than the average of the banking industry in that area. So revenues have been growing at an average rate of 20.3% per year. Their return on equity is 14.2%, and it has net margins of 38.3%. In this way, you can get a nice overview of their past earnings performance. Moving down here, you can see that key information. They had 15.77% earnings growth rate and 15.76% EPS growth rate. The bank's industry growth was 21.22%. So it's lower than what the industry average is. Revenue growth rate was 20.29%. Return on equity is 14.18%. Net margin is 38.34%. And next earnings is going to happen on the 11th of February, which is coming up very soon. Now, moving to their revenue and expenses breakdown, this is probably one of the coolest features that they have, is a chart that tells you exactly where their money goes, how it's generated, and the total. If there's cost of sales, if there's something else that needs to be taken out of revenue, that remainder goes into gross profits, which breaks down into earnings and expenses. And then the expenses are broken down into G&A, sales and marketing, and other. So this is really cool because it tells you and shows you how the money is moving and flowing, because it's kind of hard sometimes to look at a table of information. So here you can look at multiple years and it can just drag and look at the change in the flow of money for the company. So ideally, you want to see gross profits increasing. You want to see expenses decreasing over time. And that's exactly what this chart can tell you. Now, this is going to be updated when they report their earnings in a few days. The latest earnings shows that they made about 1.3 billion in euros. And then of that, gross profit was almost all of it. So their gross margins are really high, 98.9% of revenue at 1.29 billion. The cost of sales is 0. Of that gross profit, their earnings are about 493.03 million. And their expenses are 792.86 million. So a lot more expenses than earnings. And those expenses are broken down to 593.94 million in G&A. Sales and marketing was 20.5 million. And then other was 178.42 million, all in euros. You can also see where their money is coming from because it's segmented here. Their foreign strategic markets segment brought in the most at 626.97 million, which was almost 50% of their revenue. Retail banking in Slovenia was about 443.69 million, so pretty strong, about 34.1% of revenue. Corporate and investment banking, 139.97 million, 10.8% of revenue. Financial markets in Slovenia, 24.12 million, 1.2%, and other segments are about 65.97 million, 5.1%. So these are very small, but the majority is coming from foreign strategic markets and retail banking in Slovenia. Going down into their earnings and revenue history, here it's broken down into revenue, earnings, free cash flow, and you can add on cash from operations, operating expenses, just in case you want to see that. And you can toggle these on and off as well. But just looking at revenue and earnings, you can see that they're bringing in around 1.3, almost 1.3 billion euros a year. Their earnings are 493, almost 500 million euros a year. So they have about a 38.3% profit margin, which is pretty good. Their free cash flow is actually negative. So you see this with banks a lot, and what they do is they invest heavily into originating loans, and that creates a negative free cash flow. And you'll see later on when we go to the valuation section that you actually have to use a different type of DCF model, not the two-stage equity DCF like we do for normal like growth companies, tech companies like that. But you have to use an excess returns model just because the free cash flows are oftentimes negative for big banks. So speaking of their balance sheet, let's move on to the financial health section here. And you can see that they passed all 6 checks. They're saying that NLB has total assets of 30.4 billion euros and total equity of 3.6 billion euros. Total deposits are 23.8 billion euros and total loans are 18.4 billion euros. You can see that they have a huge loan portfolio relative to their total assets. Their asset to equity ratio is 8.5x. Total deposits 23.77 billion euros. Their loan to deposit ratio is appropriate. Bad loans is only accounting for about 2%. Their allowance for bad loans is sufficient. Current ratio is low. Cash and equivalents, they have about 1.22 billion euros on the balance sheet. Debt to equity history, this is also interesting. So you can see the red is the debt and the blue is the equity. Their equity has always been over, for at least the last 10 years, has been over their debt. Let's throw on cash and cash equivalents, and you can see how their cash and cash equivalents has been pretty much steady for the past few years, but they've always kept a nice distance between equity and their debt. Now their balance sheet, long-term and other assets, 28.8 billion. Cash and short-term investments, 1.2 billion euros. And they've broken down various other things under their asset side. And as I always say, the assets need to total up to the liabilities plus the shareholder equity. And so here is a visual representation of that. So here are all the assets and here are all the liabilities and equity for shareholders. Their asset to equity ratio, 8.5x, is low, and low is considered under 10. NLB has sufficient allowance for bad loans, 101%. Low risk liabilities, 89% of NLB's liabilities are made up primarily of low risk sources of funding. Loan level, NLB has appropriate level of loan to asset ratio, 60%. Loan risk deposits, NLB's loans to deposits ratio, 77% is appropriate. And level of bad loans is only 2%. All the metrics that you would want to see or want to look at when you're analyzing a bank company is listed out here for their balance sheet. Moving on into the growth section, you can see that they only passed 2 out of the 6 checks. Their earnings growth rate is estimated to be 3.7%, and their EPS growth rate is about to be 5.59% according to analysts. This is pretty low earnings growth. The bank's earnings growth industry is expected to be 11%. So 3.7% versus 11%. It's pretty low. And it doesn't even beat their own revenue growth rate, which is 4.5%. So it's always nice to see when earnings growth rate is higher than revenue growth rate. Future return on equity is 13.82%. Analyst coverage is good. And then this was last updated about 15 days ago. You can see the earnings and revenue growth forecasts. This chart is broken between the past and analyst forecasts for the future. So going into next year, full year, analysts are expecting 1.359 billion euros and 501.298 million euros for the earnings. And then you can also do 2027 and full year 2028. Now you may have seen me use this individual section in other stock analysis videos, and this is where I'm getting it from. I'm getting it from Simply Wall Street. And the reason I'm using Simply Wall Street for my DCF valuation now is because it's very similar almost exactly similar to what I was doing spreadsheet that I had to try to do a DCF valuation. I would get the same betas from Oswat's work on valuation. I would re-lever it. I would use similar formulas to get the sum of the present values of all the future cash flows, and then do the terminal rate and terminal value, add it all together and divide by the total share count. Really what I was doing on my spreadsheets, and it was pulling in as much automatic data as possible. But here they built it all in for you. So I just decided to use this DCF model. Here in the valuation section, you can see that the fair value that they've calculated is 67.31 euros, and the current price is 36.8 euros. So there it is 45.3% undervalued. The way they got this is they used, instead of a two-stage equity DCF, they used an excess returns model. And for all financial companies, the excess returns model is better, because you saw before how they have negative free cash flow from large reinvestment into loans. So they get the weighted future return on equity estimates from 7 analysts. So the stable EPS is 27.5 euros. And they've listed all the formulas here so you can look at how they calculated all these numbers. The book value of equity per share is 198.8 euros. Discount rate, which is calculated below, they got 9.3%. Growth rate is the 5-year average of GB long-term government bond rate. So this is Great Britain, the Great Britain long-term government bond rate, because they are based in Europe, which is 3%. So it even takes into account the appropriate regions. So to calculate the discount rate, they did that risk-free rate, the equity risk premium of 6%, and that's how they got the discount rate of 9.27. Now here is the explanation of why you need to use an excess returns model versus a two-stage equity DCF. This approach is used for finance firms where free cash flow is difficult to estimate. In the excess return model, the value of a firm can be written as the sum of the capital invested currently in the firm and the present value of excess returns that the firm expects to make in the future. The model is sensitive to the return on equity of the company versus the cost of equity. Excess returns equals stable return on equity, which they derive above, minus the cost of equity times the book value of equity per share. So plugging all those numbers in, they get 9.07 euros. Terminal value of the excess returns is 144.41 euros. And this is how they derive that. So the value of the equity is the book value per share plus the terminal value of excess returns, and they get 343.21 euros. So one share in LSE NLB represents 0.19678x of the actual shares where they're listed. So it's almost like how ADRs work in America. Same thing here. For example, BABA has 1 ADR is equal to 8 BABA shares. So the value per share, listing adjusted, is $67.54. So what am I doing with NLB? There's a couple of reasons why I would avoid this personally, in my opinion. One, it's a bank stock, so I don't really invest in banking stocks. They're more prone to economic events. They're also an international company. So for people in America to invest in that company, they need to use international mode in Fidelity. And usually that incurs some costs just to do the trade. For example, I looked this up, and to trade NLB or to buy NLB, it costs about $11 extra in fees to put in a trade. And then just based on their earnings and revenue growth, it doesn't look too appetizing to me because their earnings growth is lower than their revenue growth, and they're both pretty low and even lower than the industry average for that sector. For right now, I'm not going to be investing in this company. Not financial advice, of course, but I'm not going to be investing in this company. And that's it, guys. If you like this content, please like and subscribe. If you want to use Simply Wall Street or get 30% off on your Simply Wall Street plan, pinned comment, look at that and go to it, and you'll be able to get 30% off. But with that, guys, I'll see you guys in the next one.